Hello, everyone. Welcome to this quarter's installment of the Commercial Coach, where we sit down with Thomas Black from Loanspark. We talk about all things commercial. How does it tie into residential lending? All kinds of stuff. So as the mortgage broker builder, I run into all kinds of people that are looking at adding commercial into their business. They don't understand how to do it. It's frustrating. It's confusing. It doesn't work. And a while back, I had the opportunity to meet with your CEO, Michael Barnett, and talk to him about all the things that Loanspark does. And I said, this is something that's a missing hole inside of us on the residential side. So we've got Thomas here, who's an expert, has looked at thousands of deals. And what we're going to do today for anybody that's here, we're going to break down the differences between residential and commercial lending, the parallels, what's the same, what's a little bit different, what you might need to know if it's one of those things you're thinking about dabbling with inside of 2026. Hopefully we answer those questions for you. Thomas, welcome.
Thank you, John. Appreciate it.
Awesome. We still got a couple of people jumping in here. So,
Great.
Thomas, I know you've got a couple of things pulled together, but I'm just going to throw some questions at you. We're going to let you do what you do as far as just tell us what we would need to know. But I run into people all the time that get leads. They know that there's a commercial option for them. They know that there's an opportunity to make money, to do something different. They just don't know how to go from point A to Z. And so a lot of times they've tried one, they've struggled, they've messed up. And I know this is where you guys come in and you really bridge the gap between residential loan officer and commercial lender. And you guys come in and fill that void. And that's why I like to call you the commercial coach.
Yeah, no,
coach us along, you're going to help us.
Yeah.
So
Absolutely.
Can you just give me like a little bit of, I guess thing number one, give me a little layout of what you do, where you're at, just a quick blurb about Loanspark so anybody that's here kind of gets a lay of the land.
Yeah, absolutely. So at our core, we're a lending marketplace. So we offer a variety of different loan products for consumers, but you touched on what has become a huge piece of our business, which is working with brokers as well. And as you mentioned, there's a lot of particularly residential loan officers, residential brokers out there who have meaningful relationships with professional investors or first-time investors, or really anybody who's looking to get into the market. And commercial lending to them, whether that's commercial properties or investment properties in general, has long been something that felt out of reach, perhaps. And so, what we aim to do through the company, through what we offer, is demystify those products. And so, by working directly with consumers and directly with brokers, we're able to offer some of these commercial products in-house or through the marketplace, putting borrowers and brokers in touch with, and us managing the whole process, in touch with the right lenders for their product if it's something we don't lend on in-house. And like I said, demystifies the word I used earlier. I think it's one of the best ways to summarize the value add that we offer, particularly for brokers. They have those relationships. They are essentially leaving money on the table. They have customers looking for products that they might not know anything about, that might seem daunting and scary. The truth is they're not overly complex. If you can understand residential lending, you can understand commercial lending as well. And that's where we come in. And that's really the goal of our conversation today, to highlight the differences and the similarities between our world and yours.
Yeah, I think that whole demystify is a great thing. And what I see on my end is there's two spectrums. There's the spectrum over here where people believe it's because I've done one DSCR loan, I'm now an expert in all things commercial, right? So like they need a little bit of mystifying. Okay, it's a little bit harder than that. And then on the other side, there's people that assume it's so difficult, I'd never even dabble in this. I think there is a happy spot in the middle. It's not residential lending, but it's also not rocket science.
Absolutely.
So can you tell us just a little bit, how long have you been there? Like deals done per month? Like I know you guys do a lot, but like, how long have you been there? People don't want to, and we get hoodwinked on the internet today to believe that everybody's, oh, we do 1,000 transactions a month. No, that's like, you've never done 1,000 transactions over the history of your company. You guys do a lot and work with a lot of people.
No, absolutely. So I've been with the company about 2.5 years. My background, I come from the world of commercial banking. So previously underwriting commercial deals from the bank's perspective, which I'm sure we'll get into, is quite a bit different than the way our fund internally and some of the lenders we work with view commercial deals. And so in the past 2.5 years, Yeah, of course, it's egregious to say we've done thousands of deals, but we've certainly seen thousands of opportunities and screened thousands of deals. And of course, you learn a lot about the brokers you're working with is probably one of the biggest takeaways there, right? Understanding the misconceptions that people come in with, the skill sets that they do come in with that you can use as a building block to teach them how to go look for the right kinds of deals. And so here at the company, as our director of the lending marketplace, I am not only working directly with the fund to identify their ever-changing credit box and understand where the market's leaning on certain asset classes and leverages and things like that, but also individually screening all of our real estate transactions. So while I've mentioned that we offer a variety of loan products in the business lending space, real estate's a huge focus over here. And so I sit at the fulcrum between lead gen, deal intake, the sales organization, and actually working on the back end with the processing team, the underwriting team, trying to get deals closed. And so that volume of deals that I've seen over the past, call it 30 months, has really enabled me to calibrate the marketplace in a way that I think is most accessible to a variety of the brokers and borrowers that we're working with. And that really informs the products that we're pushing and the products that we're utilizing at any given time.
Yeah. So I I personally just I have submitted deals through loan.
Mhm.
We
Okay.
have had people that sat in on one of our other calls. They've come in, they've checked it out, they've submitted deals, they've closed deals. So just anybody that's sitting out there and thinking like, yeah, sure, it doesn't work. We have had people that actually listened to a call, went in and closed loans and made commissions off of doing this. So,
Yeah.
and what Thomas does, and we'll probably explain this further, you go through, you get a login, all those things. They've got some pretty nice tech. It's relatively easy. As you move into the commercial space for somebody like it's janky, the most part commercial is in comparison to what we're used to with, you know, a Fannie file and running DU. Their systems, though, they work like mortgage systems. It's put together well. You've got portals, you know what's going on. They're not sending you an Excel, but you upload a file, you have an account executive, it goes through, and you get quick answers. So, can you just give me, like, if most of the people that are listening to this are mortgage brokers, can you just kind of walk me through what actually matters, the big differences between residential, commercial, maybe how they should look at things different, common mistakes maybe that somebody might make in looking at it?
Yeah, absolutely. Certainly a nuanced question, but I think you mentioned something earlier. One product that a lot of the brokers that we work with have experience in is the DSCR product. And so that varies a little bit from your bank statement product, your 1099 product, your full doc agency product. It's more a product that's driven by the cash flow of the property itself. So I think it's a good launching point to explain in general how we're looking at real estate transactions. We're looking at it at a property level. So I would say that's the first misconception. The most common misconception I see is a residential broker comes in, a loan officer comes in, they're telling you about the warehouse that their customer wants to buy, and they're telling you that the borrower's a doctor and he makes great money. Okay, look, it's awesome that you have a borrower that makes great money. He's flush with cash. Awesome. But the reality is we're looking at a property level as a starting point. So I think that's really important to understand. That's key misconception. I think some other key misconceptions would be the process itself. So while it's not radically different than closing a loan in the residential space, the appraisal process is quite a bit different. The appraisals take 2 to 3 weeks to come back. They're quite a bit more costly, whereas in the residential world, you're talking spending under $1,000 for an appraisal. Our appraisals cost somewhere between $2,500 and $5,000. You've got environmental studies that may need to be done depending on the property itself. So there's a whole slew of fees that are a little bit different than the residential world. So I'd say that's two kind of fairly common misconceptions that we come across. And just to finish describing what I believe to be our value add, we talked about the word demystify, but we really pride ourselves. Look, it's easy to go out and get a quote on a commercial property. There's all sorts of marketplaces, not that do what we do, but that offer similar products that can throw out a term sheet, throw out a quote, easy, and you run with it. But we really pride ourselves on that white glove service. When you sign up with us, we make the lead submission process very frictionless. And we also really coach, whether it's an individual borrower that we're working with or more commonly a broker, we're really coaching them through the process, explaining why we landed it at these terms, explaining to them preemptively how the products work so that they're armed to the teeth with knowledge about our credit box. They can go out and source deals for themselves. So that white glove service, that education we provide to brokers is a real value add. It's think of the old expression, teaching a man to fish and all that. We teach our brokers how to go find the fish and not just deal with the fish they brought us. That makes sense.
Yeah, no, for sure. And I think you brought up something good. I'd like to say in the residential space, right? Mortgage is super simple. It works on one premise: risk equals rate. And
Absolutely.
right, credit, income, assets are the traditional things we look at. And then you also have the rates determined by Fannie Mae, Freddie Mac, right? What the bond market's trading at. As you move over into the commercial space, risk still equals rate. It's
Yeah.
just you're looking at slightly different variables. The cash flow on the property means way more maybe than the person's credit. Maybe they've got a hurdle to get into the program, but that's it. Or you're looking at the property itself. Is it rural? The location? There's a lot of different things. And for the most part, the commercial market, where we in the residential world, we have a backstop of Fannie Mae, Freddie Mac, Ginnie, FHA, whatever. There's always a backstop. In the commercial world, the banks are they are your own, you are your own safety net. So
Yes.
often things change a little bit there, but if you just get the premise in your head that risk equals rate, just you have to figure out what those variables are, whether it's residential, commercial, whether you're deciding to give money to your kid, right? Do you want to get paid back or not? How risky is that? What kind of rate you going to charge them? How many allowance things do they have to do? That's pretty good. Can you just walk us through? I'm a residential guy. I get that first. My agent comes to me and says, can you help my client? They're looking at buying. I just had one recently. I had some people looking at buying, like, it's a pole barn, it's a venue, it does a bunch of different things. They were looking at putting 20% down. They it's relatively rural. There's like some farm fields around it. I brought it to you guys, and it's this property doesn't fit inside of our box, or they'd need to put a lot more down. Are they able to do that? And the answer was no. They ended up finding a different solution by
Sure.
doing an equity line against a parent's house or something. But it was nice to be able to bring it very quickly, get an answer back. No, it doesn't work because of A, B, and C. It's on 40
Yeah.
acres of land in the middle of a farm field. That's great that you get that and you understand it. What are some red flags that somebody should look at? I know rural is a problem, maybe something on large, massive acreage. What are some other things that just
Yeah.
don't fit inside of the commercial box that maybe do on the residential side?
Yeah, absolutely. So, as a starting point to answer your question, I love that you brought up risk equals rate because that concept doesn't change over here. Now, it's if you look at it as a weighted average equation, there's going to be factors that weight more heavily on the commercial side than they do on the residential side. But ultimately, credit score, experience, cash flow of the property. These are the things that are going to drive your rate. One misconception I didn't mention earlier is also that commercial rates are higher than the residential world. But getting back to your question, red flags would be things like rural properties, high acreage, like you mentioned, low credit, vacant properties is another big one. And vacant's one that's a lot more impactful in the commercial world. Lack of experience can be, we'll call it a limiting factor if you're a first time investor, not necessarily a deal killer, but perhaps something that limits leverage. And I'll also take a minute to explain why those factors are red flags. So, one key difference in the commercial world as it relates to the way properties are valued is that in the residential space, an appraiser is going to go out, they're going to look for comparable sales. I don't know how many tens or hundreds of millions of homes there are in the United States, but suffice to say, it's not difficult to find comparable sales, especially in populated areas. There's homes trading on the market every single day. So, with that in mind, recent sale prices of homes are very easy to pinpoint, and therefore it's very easy to value a home based on recent sales. That's not the case in the commercial world. So, if you take the city of Atlanta, however many single family homes there are, there's going to be a small fraction of retail strip centers or industrial, right? And so that's where the cash flow is king mantra comes into play. In the commercial world, appraisers are valuing the property mostly on its income, on its ability to generate income, net income, truly, not just gross rents. And so comparable sales are a factor. Don't get me wrong. If you could find three warehouses that sold down the street, that's a great proxy for value. But most of the time in the weighted average equation, the cash flow on the property is going to drive the valuation. So things, get full circle here, the things like the vacancy or like the acreage, it's very uncommon to find rental data on a 40-acre commercial property. Anything that's going to impact that net income equation and the search for similar property types and finding what income they generate, it's much more difficult to find comparable properties from both a sales and a rental income point of view. And so again, with that equation in mind, that's why the things I just mentioned become red flags, because anything that's going to throw off the rental potential of the property. And to even expand that further, you mentioned special use type property. Again, the more unique a property is, the harder it is to find a similar property that's rented out. So for our internal credit box, and frankly, for a lot of the lenders in our marketplace as well, your cookie cutter, and I'll elaborate on that, say your cookie cutter type commercial properties are just much easier to finance because at the end of the day, like any other lender, we are looking at what is the borrower's probability of default. And in the event of a default, what are our options? If you're going to have to foreclose on a commercial property, you don't really want to have to go sell it in a fire sale. You want to be able to rent it out. If it's a barn dominium on 30 acres with a warehouse on the other side of the parcel, it's going to be a lot harder to rent out than, say, a 10,000 square foot warehouse just outside of Chicago. That's going to have a ton of potential suitors, a ton of potential renters. And so hopefully that kind of answers your question.
Yeah, no, I think that it answers it 100%.
Yeah.
You, like anybody, right? Risk equals rate. Anybody that's lending money wants a certain degree of certainty. And we all just humans, we want certainty. Lender, everybody. I want to be certain that if I give somebody a loan, that either they can pay it back or as high of a degree of certainty as possible that they can pay me back, that I have something to do with it. That's why rates are lower in our world on Fannie and Freddie, because they know that they can sell a $650,000 house in
Exactly.
the suburbs of Chicago. There's a lot of buyers for that. Maybe not a lot of buyers for a $7 million house, right? If you think jumbo,
Yeah.
in the same suburbs of Chicago, just less buyers, longer wait times, foreclosures, all kinds of stuff. So
That's
risk
exactly
equals
right.
rate. We all seek certainty. The commercial world's the exact same. They want to
Yes.
be relatively certain. Here's just something that I found, an observation. When I go out and I get a commercial deal coming my way, I want a little bit of like certainty that I can actually do the deal. And that's why I bring a lot of stuff to you guys. You have a lot of, it's a marketplace. You have a lot of brokers, different channels. So when I come there and you give me back an answer, I can go back with a fair degree of certainty that I actually, like, by quoting this, it's real and they can do it. So
Yes.
again, we're all seeking certainty. You don't want to blow up a referral partner by getting some bad answers, or you answer some guy that's got a Facebook page. Like, they're out there. It's
Yeah,
crazy.
absolutely.
Their whole
Yeah.
business runs off a Facebook page. What? Yeah, and I had another deal recently that came to me, and I'll share here because these are the things that I had. Somebody that was looking for a hard money loan. So just for anybody that knows, it's short-term financing, right? They needed like a quick bridge, had multiple projects going, have one building that they more or less own free and clear. And because of our weather here in Michigan, they've got a lot of projects that are stalled on other buildings. So they're like running out of cash flow. This is fully rented, a great building. But because of their other issues, they've got like a low 500 credit score. And so they were going all kinds of places, kept getting turn downs. I brought it to you. You guys have an option. I don't
Yeah.
think that the terms are bad at all, but it's at 50 LTV. It's 300-400 grand. It patches the gap between where he needs to go. It provides a solution. The guy right now is kicking rocks. He's like out trying to like borrow money from buddies to like, I don't know.
Yeah.
If my business is on the verge, like I'm sputtering on E on my gas tank, I don't know that I'm overly concerned about like paying a nickel more per gallon. But the guy right now is driving around looking for cheap gas stations on E. I think he will do the deal, but it was neat to know that you guys had an option. It came
Yeah.
back. We double checked the price. I feel pretty certain that I can actually do that deal. So that was nice. What else do you see? And I know you desk a lot of these deals. What else do you see like mistakes people make for the first couple times they try and do something in the commercial space?
It's a great question. I think one common mistake, and I don't fault new brokers for this when you're coming in you're not going to learn everything day one before you start on a new endeavor. Like anything, you have an idea, you take some risk, and you put yourself out there. It's very hard to understand the landscape of the commercial market and what terms might look like and explain that to your borrower prior to helping them shop for a purchase, for a rate on a cash out, et cetera, et cetera. But again, if you're coming from the residential world and you're setting expectations with your borrower in a place at numbers, at leverages, and at rates that are fairly unreasonable, it can be difficult at times to claw your way back, explain to somebody, hey, the rate's 4% higher than I thought. Maybe it's only 1.5, right? It varies, but like any sales cycle, that setting expectations phase is really important. And so a little bit of research goes a long way if you're new to the space and you are pitching yourself to potential investors. Because let's be honest, a lot of our brokers have long-standing relationships with the customers they're working with, but plenty more of them are new to the space. They're trying to strike up new relationships. They're coming to a professional investor and saying, hey, give me a chance. I can fund your commercial deals. And if you find yourself in that position, like I said, a little research goes a long way. Understanding where the typical terms are in the commercial market is going to be really important for that initial conversation. You do not want a borrower to have sticker shock. You don't want a borrower to be completely turned off by the rate. It's one thing if you tell them the rate's going to be high, you come back and the rate's high. It's another thing if you tell them the rate's going to be just like your home mortgage from 2021, and then you come back and the rate's three times that. That's very difficult to claw your way out of. So I say that's a fairly common one. Again, very understandable how brokers find themselves in that position, but there's absolutely enough resources out there, some of which we produce, to give brokers a bit more education when they're first getting started. I would say another common mistake is kind of what we talked about, the valuation process of residential versus commercial, thinking that I've got this appraisal from 2 years ago. Let's just use that. The property's worth this, or this building sold down the streets. Because at the end of the day, when a lead comes in, when a potential opportunity comes in, we're not doing an appraisal day one. We're relying on the broker, the borrower, to tell us what the property's worth, but their assessment of that property's value can be a little bit off at times, which is, again, goes back to setting poor expectations. Look, if you think a property's worth 2 million, even though they paid $1 million for it 3 years ago and they owe $1 million on it, and you go tell them you can easily get their old loan paid off because of some idea you have about the property value that's not really founded in logic, maybe we come back with a term sheet that doesn't even get them paid off or something like that. And again, it's understandable, but at the same time, with ChatGPT, Google Gemini, and a plethora of other resources out there, it's not terribly difficult to find information about what a property might be worth. And again, that goes back to that initial expectation setting conversation. Having the ability to run a quick cash flow, run a quick comparable rental analysis, a comparable sale analysis, and get an understanding of typical rate ranges is worth spending the time on. I know we're all busy. We're all trying to manage our personal life, our family life, our careers, and it's easy to say, I want to churn and burn. More opportunities means more closings. But the reality is taking time to educate yourself and understand exactly what it is you're trying to accomplish for your customer and find out if that's in line with what they're looking for is it's a win for everybody.
Yeah. I agree completely. And one area that I have seen people really mess up is, and you touched on this briefly at the beginning, the difference in what the appraisals cover, but also the cost, right? If I'm talking to you about a DSCR
Absolutely.
loan and the appraisal's 750, and now all of a sudden the next conversation I have with you is about a commercial warehouse space and the appraisal's now 5 grand. Like there's a massive difference there. One takes
Yeah.
10 days to get done. The next one might take 10 days to find an appraiser that can get out there that can do it in, right? There's just different time frames. And in sales, the quickest way to blow up your sale is to give bad information too confidently. You can give
Yes.
bad information, just don't state it as truth. I don't know exactly how much your appraisal is going to cost. Typically, they're pretty expensive, and it might take 4 to 6 weeks to get back. And if you foreshadow it that way, you now haven't set yourself up to fail. So I like to say the first rule of holes is when you're in one, stop digging. So just try to prevent putting yourself in a hole by quoting something that you're just full of shit on.
No,
Um,
absolutely. You always want to under promise and over deliver. That's a great life philosophy, whether it's related to business or not. You want to set those expectations right.
so let's say I'm sitting here, I'm still on the call 28 minutes in. This hasn't sucked, and it might be something I want to jump
Yeah.
into. I know I've got a little slide over here that you guys sent as far as like
Yeah.
Loanspark product guides, but what would be the system like? Hey, I want to maybe do this. What's the procedure like? Do they have to sign up? Do they have to pay fees? Do I have to send a bunch of stuff in through Comergent and get my company approved?
Yeah.
What do I need to do to submit a deal to you if I think I might have a commercial deal? Like, how hard is that?
No, it's very frictionless, like we mentioned before. So you would be able to, there's going to be a link that we'll provide at the end of this call, but you'd be able to go onto our website and click sign up as a broker, and the process is fairly automated. So you submit fairly basic information. We said you get assigned an account manager, which are our sales reps, and you would, even before the sign up process was officially complete, you'd be able to submit your scenario and say, hey, is this something you guys can do? And we'd be able to start looking at the deal. Of course, for you to get paid, we'd have to have the registration process, registering you as a broker complete, but it doesn't take a lot of time. It's fairly automated at this point. We've signed up thousands of brokers at this point. Like I said, it's very seamless. Submitting the lead is very seamless. And we have, if you're someone who likes to collect a ton of information to submit a deal, you can do it through our landing page. If you're someone who likes to pick up the phone and call your account manager, your dedicated sales rep, to speak to them about a scenario, you have that ability as well.
And we'll include some, I had put a little blurb up there, but we'll include a place for you to go inside of the
Yeah.
notes someplace. We'll show a slide at the end where you can just actually, I'm going to share just for 1 second here.
Yeah, please.
If you want, and Thomas, you can tell me. So I've got this slide up here, our product suite, and it says loans product guide. If they scan
Yeah.
this QR code, where does this take them?
Yeah. I was actually going to get to that next. So that takes you to our partner facing product guides and what those outline. So you've got the products right in front of you there to the left. And for each one of those bullet points, we've got a separate tab that basically outlines at a high level the credit box. Here are the types of deals we're looking for. Here are the loan amounts you want to look for. Here's the borrower minimum credit you want to look for. Here are the property types that we fund. Here are some unique characteristics of the product. Hey, we can do 50 LTV no matter what their FICO score is. And all of this information to arm you with knowledge to say, is this an opportunity worth spending my time on? Can I call this borrower back and explain to them what I might be able to offer via Loanspark? Or is this an opportunity? Or is this not an opportunity for me? And the truth is, in my personal opinion, that's always worth a call, because I have found over these thousands of opportunities we've looked at, there's not a lot of groups, not a lot of companies that are going to coach brokers and borrowers the way we do. So a lot of value comes from what I would call an educated decline. Taking the time to call somebody and explain, look, this is not an opportunity we can help you with, and here's why. And if it looked like this, we would be able to do it. And by the way, here's our unsolicited opinion on how the rest of the market, the lending market, might feel about a deal like this. You want the broker to be better today than they were yesterday. Arm them with the knowledge. It builds goodwill with them. It also weaponizes them in a way. Brokers are the lifeblood of our business. So the more we educate them, the more they trust us, and the more educated they are, the more proficient they are, which benefits everybody.
Yeah. Every deal that you look at is not going to work, but
Never.
I think you guys have the philosophy. If you can just keep people active, even like I see stuff that posted on your YouTube channel and different stuff. Some of it's just helpful just to be a better salesperson.
Oh yeah, absolutely.
Right? You know that if you can keep mortgage people, your partners, just they become better at their job. Eventually, they'll stumble across deals that work for you as well.
Yeah.
So if a loan officer has to close 50 deals to get one commercial, what can you do to help them get the other 49 to get your one? So I don't want to say it's a numbers game because your numbers are predicated based on your skill, but
Yeah.
You just have to be in the business and talking to a lot of people and being in the mix to find these deals
Yeah.
and to stumble upon them.
Yeah. It is a numbers game. Like just starting to kick up compared to the residential world, it's a numbers game in the same way. You've got, let's say 25% of all opportunities are purchases. Not every bid is going to be accepted. Not every borrower is going to go under contract on a property. Someone might have a reason to pull cash out of a property, and 2 weeks into shopping, that reason goes away. So deals are always going to fall out for reasons that are out of your control. You got to play the numbers game.
For sure. Any things that I'm just kind of looking through here.
Yeah.
Again, go to the product guide, and
Yeah.
you guys do a lot of stuff, lines of credit, leases. There's certain things that me as a broker, I can co-broker with you. And then
Yes.
there's other products too. If I just have somebody that wants I don't know, I don't see it on there, but like an SBA loan or something,
Yeah.
I can bring that back to Loanspark, have you close it, and still get paid something, even just referring business back to you, correct?
Yes. Yeah, absolutely. I'll highlight that real quick. So we have two different, we'll call it submission types. So you can submit as a broker, you can submit as a referral partner. As a referral partner, you are about as hands off as it gets. So you're making the introduction to the customer. If we're having a hard time getting your customer on the phone or something like that, you may need to step in, but you're not responsible for going out and collecting their business tax returns or their bank statements or really the title, any of the documentation that's going to be required to close whatever type of transaction it is. Our team's going to be handling that. You're going to be hands off. Hey, thank you so much for initiating this relationship. We'll get this deal closed and get you paid, and you'll get paid a percentage of the deal. Then there's the broker channel. The broker channel means you want to maintain your relationship with your customer. You want to be the one to pitch the offer. You want to be the one to go collect the docs. You want to be fully involved in closing. Now you are able, within reason, to select your own fee. So, hey, this is your relationship. If you want to charge 2% and make 2%, you want to make 3%, 4% on this deal, you're going to earn it because you're going to be involved, but you have that opportunity. And both are great routes. And by the way, it's not, you don't sign up as one or the other. So like you said, as someone with a background in real estate, you may want to be heavily involved in your real estate deals. But if you have somebody who's looking for equipment financing, maybe it's something that you don't have bandwidth for. And you're going to bow out of that conversation after the initial introduction. We're going to fund the deal and make sure you get paid for introducing us to the customer and any other future loans they might bring us as well. So that's the key difference between those two channels.
Yeah, I like to think of you guys, at least for myself personally, is just it's the backstop for where I start with things convention or with things on the commercial side.
Yeah,
Take it over there,
absolutely.
see what shakes out, and then the client's going to do whatever they did. But if I don't bring it to you, I'm just putting my hands up right from the beginning and saying, go someplace else.
Yeah.
It gives me an opportunity to be in the fight. So
For
I
sure. And
think that's
hopefully
great.
you learn from those conversations too. Hopefully every time you get a decline, okay, this type of, you mentioned red flags earlier, you get an idea of what those red flags are. And I want to mention, I know we're going to switch topics. I want to mention one more thing too, because we have those publicly available product guides, but we also have some great tools available to brokers and borrowers that are free that you can find a link from our website. So that would be a DSCR calculator, a closing cost calculator, and some other tools that we've developed that, again, no charge. You just, if you're a residential broker, residential loan officer trying to learn how to run cash flows on commercial properties, we have what I think are some of the best calculators out there for running a quick debt service on these types of properties. Again, they were built based on what I didn't like about all the other calculators that were out there and my own desire to stop writing on the back of napkins. But they're great free tools, and we would really encourage people to use them.
Yeah, so I'm going to go ahead and what is the URL to the
Yeah, I'm
Loanspark
gonna
calculator site? We can
yeah, I'm
drop
gonna
that in the or Thomas, even if you want to share.
yeah, I'll just drop it in the chat so everybody has it. But it is calculators.loanspark.com is the homepage for those calculators. And then you can access the DSCR calculator, the closing cost calculator, and the loan calculator as well. So I'll go ahead and drop that in the chat right now.
And they have a podcast that they do. There's just right, Loanspark. You go out there, you'll find a bunch of different stuff.
Yeah.
So we're doing this, just so everybody knows, we're doing this we're doing this quarterly. So once a quarter, Thomas and I are going to jump on here, do this. We've got a space inside of my mortgage broker builder community. So if you're coming here from the Loanspark side and you're not in there, we'll get a replay out to everybody that registered, but you can get in there and join. We've got like a dedicated Loanspark section where there might be some additional stuff that you get in there. I don't think it sucks, but again, I built that thing, so I'm biased the same way Thomas is about his calculators.
Okay.
When you're the one making them, you seem to think they're cooler.
Absolutely.
But jump in there. And again, our goal is to help you find more ways to do more business, close more loans, help out more clients, make more money, and ultimately get more of your 1,440 minutes every day back into your pocket. Because I'd rather do fun things than think around with a bunch of stuff.
Absolutely.
Any other kind of parting words? Anybody else have any questions? Drop them in the chat. Anything else that just somebody thinking about jumping into this or doing more of this business in 2026? Anything for them that you think a little takeaway that they could have?
Not a whole lot for me. I would say if you're standing on the edge of the diving board, jump. It's not as complex as you think it is. 2026, there's more materials out there to help with your self-education than you could ever imagine. You have the opportunity to monetize your relationships in a way that hasn't really existed before until recently, not just through us, but in general. And I would highly encourage anybody in this space to take a leap of faith, train yourself up a little bit, and start putting yourself out there. You'd be really surprised what might come of it.
Yeah, and with AI and all the things that are happening out there, those vanilla loans that are right, the 60 LTV with a property inspection waiver and no income needed, those are becoming really easy in the residential space. And it's going to be harder and harder, I think, for people to win against a Rocket Mortgage or a Better or wherever on those deals. They're going to be able to identify them faster, get in there. Servicers are going to be able to do a lot of different things. But where I think it's very hard for a big behemoth to compete with you is when you're doing individual deals that matter to individual people on commercial products, DSCR, those things. So make yourself irreplaceable because you're niched and nuanced than trying to be all things to everybody. And to me, this is just a great spot. And I think everybody should have this as something in their quiver, their toolbox, whatever you want to call it. So, Thomas, I appreciate this.
Yeah.
Thanks for jumping on. And anybody that's here, like I said, we've got the mortgage broker builder community. Join us in there. You've got the calculators, Loanspark. We had given you a QR code, and we will send out a replay of this with all of the links as well. And if anybody has any questions, you can hit us up in the group. But if not, we will let you have a few minutes of your time back. And we do thank you all for showing up.
Yeah, absolutely. Thanks for having me on, John. Pleasure as always.
For sure.
Looking forward to the next one.
Until next quarter.
Yes,
Seems
sir.
so far out, but it will be here before we know it.
It'll be warmer then too.
Hopefully.
Yeah.
Awesome. Thank you for your time. Have a great day, and we'll see you in a little bit.
Awesome. Thanks,
Thank
everyone.
you.